What's up, YouTube? This is Thomas from Thomas Invest and thank you for watching. Today I want to talk about Realty Income, ticker symbol O. Realty Income is a REIT and known for being one of the better monthly dividend paying companies. In this video I will show you what Realty Income does, some interesting facts coming from the 10K file and the investor presentation, and in the second part I will talk about the fundamentals of the company and if I'm going to buy Realty Income right now at these prices. In the last part I will also show you some possible alternatives. If you're new to the channel, make sure to subscribe to get notified when I'm posting a video. I also appreciate an early thumbs up, which helps me within the YouTube algorithm. For now, let's dive into it. Realty Income Corporation is a real estate investment trust that invests in freestanding single-tenant commercial properties in the United States, Spain and the UK that are subject to NNN Leases. Realty Income makes money through ownership of thousands of commercial properties. These properties generate rental revenue from long-term net lease agreements from the tenants. The properties are generally freestanding buildings in prime locations with good access and visibility. When we check the investor presentation, they immediately talk about being a monthly dividend payer. They are really proud of it and I think they have all the right to be. In this chart, we see that if you had invested $100 back in 1994, when Realty Income went public, you have made quite some profit, especially when you compare it to the major indices. You almost doubled your money compared to the second best index. When we compare Realty Income with the other major indices, we see that Realty Income has a 15% compound annual return for the investor, while the second best index is sitting at 11.5% return. Also looking really good for Realty Income. Some of the company highlights are that they are focusing on paying monthly dividend as mentioned before, but they also want to increase this dividend when there's an opportunity to do so. Realty Income is a really diversified company with around 650 clients, 60 industries in 50 states in the US and the UK and Spain as well. Their assets grew from 630 in 1994 all the way up to 7,000 right now. Really impressive. Another great thing is that Realty Income is member of the S&P 500 Dividend Aristocrats Index. In here we see that the top 20 client diversification. It's really important to diversify in clients, industry and also in different type of markets. Realty Income does a tremendous job here with the biggest client only representing 5.7%. In this sheet we see that convenience stores are representing the biggest part of the portfolio with 11.6%, grocery stores at 10.9% and so on. In total, 83% of the portfolio is represented by retail companies and 12% by industrial companies. I think it's a great thing when they do have industrial properties as well, because 83% in retail is maybe a bit too much, but this is also a personal opinion. When you think of retail, you automatically think about the booming e-commerce. Will retail still be here in 10 years, for example, or will everything be ordered online? This is also a big concern for me when you think about retail REITs, but it has to be said that Realty Income does a really good job here by only investing in clients with a non-discretionary or service-oriented component in their business, so your risk will be minimized. In this sheet we see where Realty Income is right now. They are in the top 10 global REITs, which is really nice, but they want more. On the right side, we see that they aim to be a 50 billion global company and to be in top 5 global retail REIT with a double-digit total shareholder return. I think this is really nice to see. They're already doing a great job, but they aim to be more and better. This comforts me a lot as an investor, and to be honest, top 5 sounds really good to me. In this sheet, we see that Realty Income was the only retail REIT with positive earnings growth in 2020. I really like this, and they were also the only retail REIT increasing the dividends in 2020. Also very nice. A thing that I also really like is that Realty Income is focusing on acquisitions as well. They use these acquisitions to grow the portfolio and the revenue income stream, of course. In here we see 2 properties which they acquire most recently. They really think of great properties with the best locations and also a strategic move. I really like to see expanding in Europe because this can bring in a lot of revenue as well. In this sheet we see that Realty Income spent about 3.3 billion to grow the European portfolio with a 100% occupancy. Right now they focus on the UK and Spain, but they may focus on other countries as well in the future. A really small detail in the investor presentation is the average lease duration. About 45% is expiring after 2031, which is in 9 years. Before 2031, Realty Income is looking at really steady numbers each year, and these contracts will likely become less. Now that we know everything about Realty Income, what they do, where they are aiming for, and what the portfolio looks like, it's time to check some fundamentals. But first, let's check the stock price. It has to be said that I do own shares of Realty Income at an average of $60. When I opened this position, I was aiming for a steady monthly dividend payer, which I would increase yearly so my dividend income will grow as well. Right now, I'm up roughly 20% in terms of stock price because I'm European and I bought some shares in the US stock market with some euros. So I'm also up because of the difference in dollars and euros. In this chart, we see that Realty Income is down year to date as most of the stocks are right now. This has nothing to do with the company itself, but all the things that happened and are happening right now in the global markets. So don't worry about it that much. In this chart, we see that Realty Income is down 7.8% year to date from the all-time high. So it might be an interesting point to enter or increase your position. So let's check the fundamentals to see if you have a great deal with Realty Income at these prices. So Realty Income is a 37 billion market cap company with an enterprise value of almost 47 billion. Right now they have a PE ratio of 52, which may look really high, but it has to be said that REITs have a higher PE ratio in general, so I'm not that worried about it. Another thing which is typical for REITs are the higher margins. In here we see that Realty Income has a 48% operating margin and a 26% profit margin. Both really looking good, and you want this number to be this high for these kind of companies. The return on assets and the return on equity are a bit low, to be honest. This might be something to dive in deeper for yourself if you not feel comfortable about these numbers. The next thing I want to discuss is the balance sheet. Right now, Realty Income has a total cash of $560 million and a total debt of $9.5 billion, which may look like a lot of debt, but it's used to grow, and this is something Realty Income really likes to do. So personally, I don't feel bad about this debt, but it should be a unrealistic number and the debt shouldn't be walking away too far. For now, it's fine in my opinion. The current ratio is sitting at 1.7, which is really nice for a REIT. You want this number to be sitting between 1 and 2, so this is typically looking really good. Here we see the revenue growth of Realty Income since 2006, which is really looking nice to me, especially after the market crash of 2008. They grow the revenue really nice and steady ever since, and it's only going up from here. An important thing for big dividend payers and also for REITs in general is the increasing free cash flow. Because free cash flow is used to pay down debt, buy back shares, pay dividends, and of course do acquisitions. So all these things led to creating more value for the investor. In here we see that Realty Income is increasing the free cash flow every year, which is very nice. This keeps it possible for this company to maintain the growth. From free cash flow is a small step to the dividends, of course. This is something Realty Income is really proud of, as mentioned before. Right now, Realty Income has a 4.4% dividend yield and pays a 25 dollars every month per share. The 5-year growth rate is sitting at 3.4%, which is not the highest, but they grew the dividends for 25 years in a row, which is really impressive. And earlier in this video, we saw that Realty Income was the only retail REIT to increase the dividends in 2020. A really important thing is the payout ratio. Right now it's sitting at 223%, which is obviously too high. You want this number to be sitting around 80 or 90% for a REIT. But be aware that this 223% you are seeing right now might be a bit different. In here we see that based on the 12 month of earnings, the payout ratio is indeed above 200%, which is too high obviously. But we also see that based on this year's estimates and next year's estimates, the payout ratio is around 80, which comforts me a lot. Based on the free cash flow, the payout ratio is sitting at 105%, which is again too much. So before investing in this company for the dividends, be aware of the payout ratio. You might want to do a deep dive in these statistics. Now that we know the basic fundamentals of the company, it's time to check some competitors. I want to show you the revenue, PE ratio, and also the dividends they pay. I won't do a deep dive in these companies, but I just want to show you some other options. There are a lot of retail REIT competitors, but I will show you Simon Property Group, Kimco Realty, and Regency Center Corp. First on this list is Simon Property Group. a 45 billion market cap company with a PE ratio of just 20, which is really low for a REIT. Simon Property Group has an operating margin and a profit margin around the mid-40s, which is also really nice. The return on assets is sitting at 4.4%, but the return on equity is sitting at 63%, which is really impressive. We see that revenue is down since the beginning of the coronavirus, so this might be an issue, but also might be something you want to dive in deeper. Since 2021, it's increasing again, which is a really good thing to see. Simon Property pays a 4.68% dividend yield at a payout ratio of 109%. You might want to check how the payout ratio is built up, because it can be the same situation as with Realty Income. The 5-year growth rate is sitting at 1.7%, which is not that high, but probably has to do something with the coronavirus. Same story as with the dividend growth streak, which is sitting at 1 year. Next up is Kimco Realty Corp, a 40 billion market cap company with a PE ratio sitting at 14.5. Again, very low for a REIT. The profit margin is sitting at 61% and the operating margin is sitting at 32%. Both are fine in my opinion. But the return on assets is a bit low, to be honest, sitting at 1.8%. The return on equity is fine and it's sitting at almost 11%. The revenue is a bit complicated because it's not growing at a steady and consistent pace back in the years. So this might be something to dive in deeper. We also see that the revenue was declining since 2018 before the coronavirus. It also has to be said that the revenue is increasing lately. Right now, Kimco pays a 3.90% dividend yield and a payout ratio of just 42%. They have a negative 5-year growth rate and this was declining before the coronavirus. So you might want to check this as well. At last but not least, we have Regency Center Corp, an 11 billion market cap company with a PE ratio of 30. Which is typical for a REIT. The profit margin is sitting at 30% and the operating margin is sitting at 38%. Both are fine in my opinion. But the return on assets and return on equity are a bit low. Same story as with Realty Income. The revenue has made a big jump since 2017, so you might want to investigate how this happened. During the coronavirus, the revenue went down a bit, but it's increasing back again. So that's a good thing to see. Regency Center pays a 3.7% dividend yield and there's no payout ratio known at Seeking Alpha. According to other websites, it's around 120%. So again, please find out yourself why it's at 120% and if it's really that high or that the number is built up differently, if you find this a problem. The 5-year growth rate is sitting at 3% and they grew the dividends for 1 year. But this looks related to the coronavirus. My conclusion is that Realty Income is a really interesting company which pays a monthly dividend. They really aim to be one of the biggest retail companies and they know how to do so. But it also has to be said that not all the numbers look that great compared to some competitors. REITs are always more difficult to analyze, but I hope you got some useful information out of this video. As mentioned before, I do own shares of Realty Income and that's because of the steady dividends previously. And also because of the portfolio, of course. They are really focusing on the most interesting retail companies because e-commerce is booming nowadays. Before buying some competitors, please look up the portfolio to see how the company is built up. For now, I will slowly add more shares of Realty Income. It's not a value play for me at these prices, but I also think you can score a pretty decent deal at these same prices. I think right now I'm between a hold and a buy position. We first need to see what Realty Income is doing about the payout ratio before I will increase my position big time. For now, I'm waiting and slowly adding more shares of this company to increase my monthly dividends. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and it did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.